Hi, this is Todd Baker, your certified mortgage planner. And today I want to talk about tax deductions, at least the basic ones you make sure you're looking at and you don't want to miss for 2018 under the new tax changes that went into effect. So sort of a bullet point list and wanted to go over those with you. So first of all, mortgage interest. So mortgage interest is still a deduction, and it's capped for married couples for loans up to mortgage loans up to 750,000. So here's the thing. That's for most of you. If you're single, it's $375,000 loan amount. But in both those cases, that's going to cover most folks. Most folks have mortgage loans below that amount. So generally speaking, you're going to be able to deduct your interest. And how that works is your loan servicer will send you a form called a 1098. It'll say 1098 and it'll show you the mortgage interest that was paid. Now, for many of you who bought a house this year, there are some additional deductions you want to make sure you're looking at. When you closed on your home, you were given a final closing disclosure. And if it was with me and you don't have that, I can give you a copy. Just reach out. And this is true whether you purchased or you did a refinance. You were given a final closing disclosure. Well, the way it works is the discount points that were paid and the prepaid interest that were on your closing disclosure, and even some of the prepaid property taxes, all of those can be part of your deduction. And I can tell you right now, most people don't give that information to their CPA or their tax preparer. I'm going to take a quick side note here. Make sure you're working with a tax preparer, whether they're a CPA or just someone that prepares taxes, that is going to add value as an advisor. There's a dynamic in the United States that everyone is so afraid of the IRS being audited, or they're going to come after me if I make a mistake, that when you give your tax information to your tax preparer, when it comes back, if you don't owe any money or get a refund, you're happy, or if what you owe is really small, you're really happy. You're not really, and you're thinking your tax preparer is a genius, but actually you need to educate yourself and be looking at what they prepare. Number one, always review your return. Make sure you review it and you start to understand. It's really not that hard, okay? Number two, the standard deduction this year is real high, is much higher than it's been in years past. In other words, you have an option of doing what's called a standard deduction, where you're able to take, for example, for a married couple, it's $24,000. And so I was doing some research before this video, and there's websites out there that are saying, like, oh, if it's $24,000 and your mortgage is below $550, you don't need to just take the standard deduction, don't deduct your mortgage. And that's not right, because it depends on what state you're in. In Texas, we have higher property taxes. So brings me to another point. Property taxes, you can still deduct, but it's capped at $10,000. So you want to make sure you're looking and comparing, like, hey, what happens if I use my mortgage interest, including what was ever on my closing statement if I purchased or refinanced in the last year, along with the property taxes paid, and then compare what's going to get you a better result, the standard deduction or the homeowner deduction. The homeowner deduction goes on what's called Schedule A, and it gets itemized, and it allows you to, like I said, take advantage of those deductions. For many of you, it's still going to be more advantageous to itemize. These are things that you need to ask your tax preparer. And I can tell you right now, most tax preparers, they do a mass volume of transactions. All they want you to do is give them the data, they prepare your form, and they get it back to you. It's like a machine. It's like an assembly line. So you have to hold them accountable and yourself accountable to make sure you review what they send and make sure they took care of all the deductions. So you're looking at home interest paid. Now, for many of you, if you had a second mortgage or if you got a home equity line of credit, the interest on that is typically deductible as well. Once again, you have to give that to your tax preparer, but that's typically deductible as well. Some of you might have had energy credits if you did solar panels. Make sure that if you did, you're looking at that. And then also, based on this current model, if you're salary or hourly, and you're on a W-2 withholding schedule, which is the form is W-4, most of you will put the number of withholdings based on the number of people in your household. And all that means is they withhold more from your check. There's actual calculators online, and if you're interested, I can send you one where you can plug in your situation and adjust the number of withholdings and you could start to determine what you want taken out of your check, because tax returns just mean they took more than they should have. It's not like this big bonus you get, like magical bonus. What it ultimately means is you overpaid your taxes, and then you gave the government your money to use for a whole year. So what a lot of people do is they start to really self-educate themselves on tax returns and understand how they work and understand about what you're going to get back. Let's say if you were normally getting back a $5,000, you might be able to adjust your withholdings and get that in the form of an extra $400 a month in your take-home pay. And then when you file your taxes, you basically don't pay anything. You break even, or maybe you get back $200, or maybe you owe $200, something like that. So adjusting your withholdings on your W-4, you can do that typically through your payroll portal, and it's something you want to look at, and you can look at that once again with your tax preparer. I can tell you this, a good indicator is when you start asking questions of your tax preparer. If they joyfully and enthusiastically engage you and want to educate you and are a good giver, that's probably a good indicator that they're a good professional to work with. If they flinch, meaning well, why do you want to know that? That kind of attitude, fire them. Literally, they're a dime a dozen, and if they're not willing to add any value and educate you and make sure they're giving you, I mean, the tax code is thousands of pages. Their job is to make sure they're using every bit of that tax code to get you the most advantageous position for you and your family. So make sure your professional is fulfilling that obligation. So hope you found this helpful. Once again, if you did a loan with us this year and you need either your 1098 or your closing disclosure, because many of you, even though we give it to you and title gives it to you, a lot of you don't save them, or you can't find them, or you can't dig them out, we can get those to you. Just let us know. All right, so thank you so much, and feel free to contact me if you have any questions about home loan finance, financial planning. I'm here to help. Thanks so much. Bye-bye.